Good afternoon, everyone. Today is Friday, the 4th of January, 2013, and this is Brian Shannon from AlphaTrends.net speaking. We had a heck of a week here for the Bulls. The S&P 500 was up 4.5%. Russell 2000 up to all-time highs, up 5.7% for the week. And we had strength pretty much across the board. Financials continue to rally strong, and they led last year, and now this week they're up 5.3%, which puts them up as the leading group again this year, up 4% so far. Now we take a look at the market, and as we were talking about last week on the longer term chart, we had the potential that maybe this market was setting up a right shoulder and breaking a neckline would be bearish for this. Well, obviously we had a big gap higher as the fiscal cliff got resolved, or at least delayed certain aspects of it. And the point is, it was the reaction of the market that began on Monday when this market really ripped higher here, and then it gapped higher again on Wednesday after the holiday. So we have a very strong market. You have to look at it and say, be super impressed. Today our advanced decline line was strong once again, about 2,300 advancing stocks for 700 decliners. So the market is back in full gear to the upside. It is a little bit extended, and I think that some people got frustrated here at the end of the week as they tried to pick the top in this. But we see a pattern of higher highs and higher lows above a rising 5-day moving average right now. The scenario we were looking for after the holiday was actually a pullback towards the 5-day moving average and then break some resistance. But obviously we have to adjust to what the market gives us. The market gave us a big gap higher, and it doesn't make sense to chase that strength. But 3 days ago, as it got back above the volume weighted average price in the afternoon here, that's where the market really continued to add to those gains. And the average stock, most stocks were up this week, and there's plenty of opportunities still on the long side in individual names, and that's what we focus on every single day in Alpha Trends. And if you're not a premium subscriber, you're listening to this on YouTube, and consider at least a free 2-week trial to the service. And let's take a look further at some price action. So what we want to see for next week, I think, is that we want to at least see these lows from this week hold. Right now we do have a higher low at about 145.30, so that'll be an important level as well. But I think if we can just continue to hold up above this 144 and 70-ish level, that's where we ought to find some support. The volume weighted average price for the week is right around in that area. Well, it's about 144.10. So the buyers are back in control here, and you have to respect what the market's telling us, not what may or may not make sense to you personally. The Nasdaq, as we know, last week had broken down below some important support at 64.5, and we were talking about it being guilty till proven innocent unless it could get back above there. Well, it got back above there on Monday, above that 64.5 level, and it held on, and of course gapped higher as well. Now this market wasn't quite as strong. It is, have a near-term level of support that we want to monitor at 66.5, because breaking that would create a short-term pattern of lower highs and lower lows, and from there I think it would be reasonable to at least test the 66 level where it ought to encounter that rising 5-day moving average as well. But we had an erratic pattern in here, and it continues to be erratic. So I think that some pullback and consolidation down towards 66, even maybe a little bit lower as this 10 and 20-day moving average rise up to meet the market would be a good place. So the emphasis is when the market gets like this is to focus on the individual stocks more than trying to trade the indexes that are consolidating. But we've got a lot of stocks, again, 2,300 advancers to 700 decliners today. A lot of stocks are behaving well, and of course the Russell 2000, as we mentioned, did close at an all-time high here. So there's it's never been higher, and the path of least resistance, of course, again, is higher highs and higher lows. So we have to respect the trend and what the market's telling us. The volume weighted average price of the last 3 days at about 86.70 may or may not be important, but I think that the more important level for next week will be for it to hold above $86 a share. As long as it holds above $86 a share, I think the average stock is going to have an easier time to continue to move higher. Now, the average stock doesn't mean every stock, of course. Google was down 15 points. It rallied up close to that declining 50-day moving average, and that's why we say, again, when a 50-day moving average is declining, the daily trend is considered guilty till proven innocent. If they don't scare you out, they'll generally wear you out. I did not expect this type of week for for Apple. I mean, it was up on the week. If you look at where we were a week ago Friday, right in here, we were down at about 508ish, and we finished the week at 529. But of course, we had this big rally that had failed to hold, and yesterday we had that gap lower. So today today we had the gap lower, and we continued to bleed off a little bit into the close. So Apple seems as though maybe it still needs to settle down. It's trying to hold that 10 and 20-day moving average. Today it did get down near that 5-day moving average, and if you look at a Fibonacci off of the recent high and low, we came down to about 50%. I don't think there's, I think that Apple is probably the better for day trading down in this type of range in here, as the volatility is likely to kind of bleed out a little bit. And don't forget that weekly chart still has the potential that it can head down towards about that $460, $470 level, where we have some Fibonacci levels as well. So again, the average stock is moving higher. It's not just an Apple market. Semiconductors recovered very nicely in here. They've been extremely erratic. The better group, as far as the stronger group this year and last year so far, is financials, and the financials continued higher. They broke some resistance here this week, and now it looks like they are headed for a test of the 2010 2011 levels, and we're basically there. In fact, if we take a look at these highs from 2010, they were at about $17.12. Last year the high was $17.20. Today's high was $17.08. So we're basically on the highs of the last several years, because if you go back further, of course, we had the meltdown in here. So we're up at multi-year highs. So this would basically make it about 4 or 5 year highs in the financials. And people who've been trying to fade this group and sell them short are getting really what they deserve for shorting an uptrend, which is losses. We have higher highs and higher lows. It's getting a little extended. Some pullback would be reasonable to expect. And I think next week we want to see the market hold above $16.70. Real Tick, by the way, is the sponsor of this show on each Friday that you see on YouTube. So check out realtick.com. They're the people who bring you these charts. And let's take a look at gold, because this gold's been getting a lot of talk. And again, it's below a declining 5-day moving average. We talked about the measured move over in here, and how it lined up with the Fibonacci level off of the June lows in the 2/3 retracement level. We're back down to those lows though, and or very close to those lows. And gold is going to need some time to try to settle down in here. It's unable to hold that 200-day moving average on a closing basis really for the week, and that's right around in here at about 161ish. So gold, I think you got to look at it as if it's going to need time to at least recover. We've still got a pattern of lower highs and lower lows. So bottom fishing is just that. Just you're looking for a bottom where there's no evidence of one yet. And the same goes true for Apple, that you're going to get good bounces in these types of stocks, but you're better off going with the stocks that are in uptrends after they've had low volume, low risk pullbacks to a level of where we can control our risk by having it at a nearby support level. So that'll do it for this week. Thanks for tuning in, and have a good weekend.